All right, the Dow crossed 13 and 14,000 levels in '07, but what have you done for me lately? Our panel joins us now with some of their top stock picks for '08. Brett Hawkins is the portfolio manager at Thompson Segal and Walmsley, and Price Headley is the chief executive and founder of BigTrends.com. Price, kudos to you, first of all. You were the guy who recommended MasterCard when it was $160. It's still going up to this day at $215 a share. Well done.
Like
you still like it. All right.
I own it. Stuart, I think that the bottom line is you want to own leading companies. MasterCard is like a license to print money, as they're taking a 2.5% out of all the credit card transactions, and people are still using credit cards as much, if not more, if we're going into a recessionary time. So
okay. So now what we want from you now is another stock like MasterCard that's going to go up just as much as MasterCard did. What have you got up your sleeve today?
Well, I think when you look ahead into 2008, Stuart, I'm expecting that gold and the metal stocks are the place to be in 2008, gold especially. My favorite that I do own is Agnico Eagle Mines, ticker AEM. They're basically expanding their capacity. You're going to see gold continue to go up because fears of inflation are going to come back. The Fed's going to ease again in late January, and that's eventually going to show up. It's already starting to show up in the CPI and PPI inflation numbers. It's going to show up as increasing. It's not a very high rate right now, but it's the trend that Wall Street cares about. That trend in inflation is up. And high oil prices are here to stay too. That's going to make Agnico Eagle, to me, and gold in general, the place to be in '08.
Brett, in the coming year, if you look back at trying to find bargains this year, there are only really two hard-hit areas. It is the financials and consumer discretionary. The other sectors in this country don't look like such great bargains. Where do you put your money for the next year?
We really see right now the market's not really inexpensive or expensive, at least the way we look at it. You're really trying to find individual names, I think, where there's opportunity. And really, I don't think there's really big sector bets we would make. We are still very cautious on financials. We still think it's a little too early to dip down into that sector for the most part. But we're really looking for companies with pretty good stability in their earnings streams, because we do think there's going to be some headwinds in 2008 for a lot of different sectors of the economy.
Well, like where? Like what, if not specific names, like what?
Well, I think pretty much anything that's levered to consumer discretionary stocks, I think will continue to see difficult times. And, if you look, one of the real drivers of economic growth over the last decade has been the tremendous credit expansion across most sectors of the economy. One of the issues is as that credit growth slows, those places that have benefited from that credit growth over the last decade are probably going to be places that are going to have a tougher environment going forward.
All right, Brett, I just want to interrupt you. We got some breaking news that I want to bring to you. The IRS is saying that Congress's late fix last week to the alternative minimum tax, that one-year patch, is going to delay income tax refunds for 3 to 4 million early filers. That, again, the IRS is saying that 3 to 4 million people who filed their taxes early are going to see those refund checks delayed because it took Congress so long to patch the alternative minimum tax. We want to, with that, Stuart, we want to get back to our panel.
I do. I'm going to actually throw Price Headley a curveball. Price, I hope you don't mind here. But look,
I like them.
I've been following in 2007 what I'm going to call the four horsemen of the NASDAQ, which are Apple, Research in Motion, Baidu, and to some degree, Garmin. Would you touch any of them with a 10-foot pole in '08?
Well, I thought you were going to mention Google at least, Stuart. But, basically, I think that what the risk is coming into the beginning of '08 is that all these big winners from '07, and Google is at the top of my list of ones to be wary of, are likely to get sold as we head into the new year. Why? Because it's a new tax year. Speaking of taxes, it's a new tax year. Now investors who have been waiting to sell until the new tax year will start unloading these big tech winners at the beginning of '08. I'm looking for actually a quick sell down in tech at the start of '08, and actually I'll take the other side of the financials, a quick bounce back for a lot of the financials for the month of January at least. I don't think it'll last much longer than that.
We're going to hold you to it. Price Headley, Brett Hawkins, thanks very much, gentlemen. Appreciate it.